planned to make for a very long time, and I've just been putting it on the back burner. And to anybody who ends up watching this, I'm sorry for that. This is Trading for Dummies. I have to give a disclaimer. If you're watching this, you're not a dummy, but I hope to simplify this in a way that anybody can watch this video and not feel overwhelmed and not be intimidated by the market after watching it, and feel like maybe it can be something that they can start diving into. So that being said, bear with me because I've never done anything like this before. I might watch it back and see how it is, see if the volume's okay. I'm gonna try and turn my volume down on my music a little bit. I want background noise because when they fixed my fan in my computer, they made it super loud, so it's a little annoying, and I'm trying to drown it out a little bit. Anyways, so here we go. I think trading is, there's 5 main pillars. You need a strategy, you need psychology, you need risk management, you need what you're trading and how you're going to be trading it, which is kind of similar to your strategy, and then what you want from your trading. So I think let's start with the bottom. What you want from your trading. That's something that when you start this journey, you are going to need to think about and figure that out for yourself. People come into this thinking it's a get rich quick, get rich fast, easy money thing, and eventually it may be that. But as some of you are probably seeing when you're looking at what's in front of you, it makes no sense. When I started trading, it was with crypto. There's forex trading, there's stock trading, and what I do now is futures trading. There's long-term trading, swing trading, short-term trading. What I do now is very quick, precision, algorithmic style trading. So those are some strategy things. I'll go more into that later. But it's overwhelming when you first get started. When you come into it, if you're expecting to get rich quick and make a bunch of money off the rip, it's not likely to happen. And it is very simple. Trading is, you're clicking buy and it goes up and you make money, or you're clicking sell and it goes down and you make money. And if you click sell and it goes up, you lose money, and if you click buy and it goes down, you lose money. It's like really that simple, but knowing where it's going, why it's going there, and how to get in and out is what makes it a little bit more of an art and more of a skill. So you might be able to click a button your first day trading and make money, and you might be able to find somebody who's very knowledgeable and copy them for a very long time and make money. But do you want to know how to fish, or do you want to be given fish, right? So my thought process when I came into this was learning how to get good at the skill and worrying about the money and whatever comes after that. You know, you can make a doctor's income from this skill and work a very, very small fraction of the time that a doctor is working in their day to make their income. And if you come into it expecting it to take less time than a doctor's education takes them, I think that's a bad mindset to come into it with. If you're going to be able to essentially click buttons from your house and make thousands of dollars without having to talk to anybody or rely on anybody else for it, you should expect some work and blood, sweat, and tears to go into that, and it's not going to be an easy journey. So coming into it expecting it to be is already doing yourself a disservice and setting yourself up for failure. So I think getting real about what you want from it and a timeline on some like small time frame goals is good to have when you get started. It's also good to set big goals. You know, it's good to shoot for the stars, and if you end up in the moon, then you're close and you're farther than you would have expected. I set some crazy high goals, and if I wouldn't have set those goals, I might have given up and I might have not gotten as far as I did. So I think setting realistic goals, but also a few that are unrealistic, so you just have something to really, really shoot for that's high. And at the end of the day, that just shows belief in yourself. This is hard, and if you don't believe in yourself and talk positively to yourself, you're not going to make it. And that's another thing. Psychology is huge, hugely important. Finding some good books, some good people to talk to, some good groups. I personally stay out of all the groups now because it felt like when I was in my learning journey, I would get in a group, absorb as much information as I could and as I needed from the group, and then I was just kind of comparing myself to people and ended up stagnating. And I think that can be very dangerous and not what you want. Hold on, I gotta make sure this is recorded. Okay. Good. You could end up stagnating because you're comparing yourself to people who you don't know how long they've been doing it, you don't know how much time they've put in, you don't know how their brain works, you don't really know anything about that person, and now you're comparing yourself to them and trying to expect what they're getting out of the market from yourself. And that's, again, there's things that you can do that are setting yourself up for failure. So finding some good books on psychology, finding some good videos on psychology. I have a really good resource on psychology that I use. It's it's something called tapping, and there's like some emotional free. It's called emotional freedom technique, and that's something that I have started using recently and has been an absolute game changer for me. When I started using it, my first month of using it, I didn't lose. So I worked through a lot of stuff that I was holding in and had some big issues from. So that's something that I can share more of. If you're watching this video, you'll obviously have access to me in some form if you just want to leave a comment, or you might have my phone number, most likely. So there's that. But psychology is super important, but you have to have a strategy before you can even worry about that. Like, you have to be able to win before you can learn how to win and learn how to lose, right? So if you just come into it and you're like, okay, let me focus all my energy on psychology, like, you're gonna end up in a good spot. It's not a bad thing to do that, but you still need to have wins and losses. Like, at first I started focusing a lot on psychology and I still was able to win and lose, but like, I didn't even know how to win and lose, and I was like worried about the psychology of things. And I think sometimes at the start you almost have to overtrade a little bit and have no rules so you can kind of just like speed up your process. And you might build some bad habits, and that might not be the best advice, but at least for me, there's a lot to learn, and there's a lot of, you know, when you start this, it's really overwhelming and nervous and scary, and you're like, oh, am I gonna lose my own money? What's going on? I'm stressed out. Oh, I don't know what to do. And so you kind of just need to like get the jitters out and like get used to the process of doing the thing. And the thing that you're trying to be doing is trading. So you got to trade, get used to trading, right? So that's a thing. And then with strategy, you know, learn whatever you want. There's so many different ways that the market moves. People use indicators, people use robots and signal services and all sorts of different things. And I think what's most important is that you pick one thing and you have a system to track and journal how you're doing with that thing, and then stick with that thing for long enough to know if it's going to work or not. Lots of people can make a lot of different strategies work, and a lot of different strategies are built for different people. Some people are only able to look at the charts for a very small time of the day, and they want to be in big moves, so they want to keep it on the higher time frames, and they're going to be using, you know, more of a swing trading style. Some people are going to be like quick scalping. They're like really impatient and they just want to get in and get out. They see green, they want to take green. And there's nothing wrong with that. So I think finding out how to win and what strategy works best for you, and then just sticking with it and trusting it and knowing that, you've put in work to learn that strategy. So 50% win rate and focusing on a good risk to reward ratio isn't a bad thing to do. And you're going to end up in a good spot from doing that. At the end of the day, it's just about consistency, and it's a journey. You're going to evolve as a trader as you do this. I started using EMAs and moving averages and VWAP and RSI and all these different things, and now I have 3 indicators. One is this thing on the bottom that is my message to myself. One is telling me what midnight's price is and what 3:30 and 7:30 a.m. price are, or not 3:30, 13:30. So that's 1:30 in the afternoon, and then 13:30 in the, or sorry, 7:30 in the morning. Stumbling my words. And then I have this one, which I don't even use most of the time. I have my template here, main, and that one's toggled off. But what it does is, let's see here, show all the sessions. So what it does is it shows where the session, I have it set for different times. And every move has an open, a manipulation, and a distribution. So here's the open, here's the average manipulation level if it's an up move, and then here's the distribution, which you see gets hit way later in the day, but you can see it goes from the manipulation to the manipulation. Here it opens, goes same thing, manipulation, manipulation, up to kind of the 7:30 range. And Friday was very tricky price action, so this is not the best example. And sometimes it's really clean and perfect. But then it comes down to the manipulation again, and then also I have these set in my own manner, so it's what I chose to put it at. If you set it at like maybe 12:30, here I'll change it just so you can see an example. 13:30. So here's 13:30. It opens. It hits the manipulation, it comes back to the open, doesn't get much lower than that, and then it goes directly to the distribution. So that's like I said, indicators are your preference, and I cut it down to where I'm only using things that I could either calculate myself or draw. Like that statistical stat map, I could technically calculate that. I could go through all the sessions in the past 2 weeks or 3 weeks and see, how far the big moves are. And when I started trading, how to build a strategy, one video I watched, it said reverse engineering is how you build a strategy. And I kept noticing that there would be something like this, it would be built up like this, and then there would be like a big fake long wick, and then it would go the other way. It would be moving up like this, there's a big fake long wick, and then it goes the other direction. It's like a slingshot. It goes up, slingshot, and comes down. Right here, slingshot and goes up. Right here is a great example of it. Slingshot and goes up. Slingshot and goes up. So I kept noticing that. So that's what I was looking for. And then I kept noticing when I first started, and when you have your chart first time, you'll probably have the volume bars down at the bottom. That's like the most common indicator. I don't have it saved or anything anymore, but I would notice that at the same times every day, the one volume bar would be higher. So I kind of started leaning towards believing that this whole thing was run by a computer program, and then just kind of finding puzzle pieces that led me towards the strategy that I currently use. So let me get this back off of there just so it's bare. But that's something you can reverse engineer strategies, and you come over to the side and you find measurement tool, long position. So you find something like this, and you're like, okay, it faked down 49 points and it moved up 250. Okay, so that's, you could frame your trades like that and just like go throughout a couple, try and find that in the charts a few times, right? Like, okay, here's another one. You know, all right, you get your move, and it ends up going higher. And you know, as I have some stuff drawn on my chart. Let me get rid of that again, but you can see it went right to one of my levels. And if you look at this is the way the market moves is it attacks liquidity levels. So this is clean, smooth, smooth, and where does this move come up to? Clean, smooth, takes that out, right? Same here, like there's some liquidity under here. And there's gonna be liquidity here. So you find it on the extremes, like on the swings. So it comes right here, it sets up that clean stuff, drops down, takes out that swing, and then if you look, this is a little bit of early peek into strategy type stuff, but if you look at where this is, look at where this is, and look at where this is, and there's really like not any bodies closing under it, and you can see that this, before it launches, hits almost exactly at the quadrant of that. So that's just a little peek in some of the stuff I use. It's not random. It's not, you don't need an indicator. You can draw this stuff yourself and see most of this stuff. And that's what I use, and I'll go into that. I'm gonna make a separate video, but this is more of like just basic kind of surface level stuff. So you need strategy, you need psychology, you need what you want from your trading, you need what you're trading and how you're trading, like I mentioned. So are you going to be swing trading, long-term trading, all that type of stuff. You need risk management. So you're always going to want a stop loss. That's basic stuff. And you always want to be focused on a risk to reward of at least 3 to 1. So if you use, you know, a 15-point stop loss, you want to be able to get 45, 50 points out of it. And that's my personal preference, my general guideline. I usually end up shooting for more because I'm kind of a greedy guy, and I would have a higher win rate if I didn't. But like I said, when I got into trading, my goal was get really good at the skill. And my opinion of a good trader is, you know, I want to be able to find the entry that's within this and catch this move down. And then I want to also be able to find the entry that's within this, catch this move up, catch this move. Like, I want to be a part of the big moves, right? Like, if I look at my chart and I see this, I don't want this small chunk in the middle, right? And I also don't want this like chunky nasty stuff, right? Like some of this stuff you don't really want to be a part of. You want to be a part of these clean, smooth runs. And you're not always going to be a part of that. You're going to sit in some of this. There's no way to guarantee that you don't. But the ideal part is to be a part of the big part of the day. Because as a human being, we're all going to feel FOMO regardless of it, how well we train ourselves with our psychology or not, right? Like if you come into the chart and you see that it moved up this high, I don't really care who you are, and especially when you're new, you shouldn't be using enough size to where you can make this much on this much of a trade, right? Like you should be using 1 to 2 micros. That kind of brings us into what you're trading. You should be using 1 to 2 micros, depending that's on NQ. If you're trading ES or something else, you could go a little bit more, but I focus on NQ. What and how you're trading, so I'll give a couple things. NQ is the main thing. I trade futures because that's another thing on the list is capital. I'll get to that, but I'm getting all scatterbrained. Gotta focus. So you can trade NQ, ES, gold is something that I've traded in the past, and then crude oil. Those are things that all move pretty similarly and pretty algorithmically, and you can trade micro contracts in all of those and find a good risk to reward ratio trade throughout the day. You only need one good trade. That's one of the books that I read when I started this. It was called One Good Trade, and in the beginning they repeat one good trade after one good trade after one good trade after one good trade. So your one good trade could be this down move, and then okay, cool, I'm done with the day. Not being greedy, cool. Or your one good trade could be this, and then you're focused on the next one good trade, and then you find a new opportunity here. Maybe you're on a smaller time frame, find something in this choppy crap, get an entry, your one good trade up to here. You know, like there's plenty of opportunities for one good trade throughout the day. So you don't need to feel like you're missing out on any one good trade. You just need to make sure that you have a system that you trust and you get a part of something, right? And you're gonna lose. Nobody's perfect. You could win 40%, 30%, and still be profitable. If you're focused on win rate, you know, you take five. If you have a 5 risk to reward on average, you can take 4 losses and 1 win makes it back, and you're in profit. So I would mainly focus on, like I said, just getting the skill, being able to get a part of big moves with low risk, and then learning how to pyramid into things, take partials, you know, because as you see, it doesn't just go straight up, right? So if you're in down here or in right here, and it goes up here, well, it's a smart idea to take some profit. Maybe you close your whole trade right here. Then you see it comes back down to where you entered at the beginning, and you're like, well, I already took that trade. It's not going lower. Okay, let me get in again. I'm only risking a little bit of my profit that I already secured from closing it up here. Okay. Oh, wow. Now it took out my bigger target that I had for the day. Cool. Close some profit here. Sit out of this chop. Oh, you see a base forming right here. Oh, it's a certain time of the day. You know, maybe starts looking like it might make sense to go up. Okay. You catch this ride up. You're only risking a small portion of your profit from this move. You already caught some of this move. You caught some of this move, compounded it. Then you're risking a small portion of that, and you make even more of the day. You know, like it's not a straight line up, but you can hold the same bias, or you can trade both ways, right? Maybe you're holding a short bias and you miss this move, and you're like, oh crap. Okay, well now, okay, it's similar thing. It's up here, similar area where you wanted to get short from before. Okay, now you get short again. You catch it down here. You don't have to be greedy. It doesn't have to hit these targets, but you catch a piece of the pie. If you're trailing your stop and using smart risk management, okay, now you caught a little piece. You don't need a whole bunch of size on to catch a good amount of money. Most people are coming into this making, you know, say you're already making 6 figures. That's what, if you work 5 days a week, 40 hours a week, 100,000, and I'm gonna assume that like when I do this calculation, I'm gonna do it without even paying any taxes. So $100,000, no taxes taken out of your income, divided by 52 weeks, divided by 5 days. That's $384 a day is what you need to make. If you use 2 micros and you catch a 100-point move, which happens very often throughout the day, that's $400. So like, it's you're risking 60 to 80, maybe $100 when you're newer to make 500 bucks, which most people are making in their day of work, 8 hours of work, listening to some jackass you don't want to listen to. Like, I'm sorry, but clicking a button, not listening to anybody is worth however much time it takes you to get to that, right? That's just my take on it. So you need what you're trading, how you're trading. You need to pick a thing, and then don't jump around. Okay, I'm gonna trade NQ, then ES, and this, and this, and this, and this. Just pick something and stick with it and get to know it, right? If you 6 months in, or that's too long, 3 months in, 2 months in, you're like, I can't even win at all with this thing that I'm trading. Pick something different. Ask somebody. You're gonna learn and meet people along this journey that are gonna be able to help you, and you're gonna find somebody who knows and can give you something that fits your personality and style a little bit more. Like, you're gonna find what makes sense to you. And with these 1, 2, 3, 4 things I gave, I think that's all you really even need to think about or look at. If you look at anything else, it's fine. There's plenty of stuff to trade, but these are good liquidity. They're moving. the markets are all moving. Like you see these two, they look very similar. So I can explain something like that about that in the strategy stuff. And then this, like, it's not the same, but it's the same, right? Like sweeps this liquidity and then comes down, then comes back up. Like and I can, let me just get weird here. Okay, boom, hits there, balances around. Like, this is not random stuff. It's all gonna repeat and do the same stuff, right? I don't look at crude as much because it's a little bit more range bound. As you can see, this is the daily chart, and it's just in the same chunk. This is gold, this is ES, this is NQ. So the dailies look much different compared to crude. It's like a little bit more, like you can see the candles are overlapping, going back and forth. So if that's your style, if you like trading range bound markets, then that's good. You just scalping back and forth, that's good. If you like directional moves, that's good too. You pick whatever, you find whatever works best for you. It's all part of the journey. Okay, let me get these back off. Switch to a higher time frame. Let me think if there's anything I'm missing. Oh, prop firms, and also like how to set up your chart and stuff. Like, I don't really use, like, there's all these drawing tools on the side. All you really need, to be honest, is the rectangle, fib retracement, horizontal raise, and text. Like, you can leave a little note for yourself. Hey, I'm a good trader. Haha. Hey, you need to look for shorts until the blue box is crossed. Okay, cool. Leave that note for yourself, and then markets here, right? I mean, this is where I put the blue box, so hey, I'm a good trader. Look for shorts until the blue box is crossed. Oh, we're back to the blue box. Oh, dang. All right, I'm gonna take a short. You make money. This is really sloppy, but you see, and you can take a target here, because there's another thing that I use. Bam, up to there. Okay, it's not random. Hey, I'm a good trader. Blah blah blah. Blue box, cool. Bam. Okay, came down. Oh, you couldn't get to this box. Weird. Oh, that's probably random. I wonder why it stopped. I bet I can't find it. Sorry, I'm being facetious over here. I want to show it. I want to show it. All right, I'm gonna show it. I'm gonna move this up here. There it is. See, that holds everything. But where is that? If you look at this body, it's very close. Bam. It's holding. Let's put it there. Holding. Midpoint hit perfectly. Anyways, alright. But yeah, blue box. Alright, boom. So you can leave little notes for yourself. That's the point of that. Sorry, I got sidetracked. You can save layouts. You can save, favorite, whichever ones you want. There's a whole bunch of indicators. Community indicators, technical indicators, ones you can create, ones that are invite only, all sorts of stuff. So, like I said, I only have 3. I use 2 of them basically. Let me think here. What else? Okay, I'm gonna get to the prop firm point. I just want to finish everything. When you're new, you're gonna want to do just paper trading, at least for your first week. That way you can, alright, I'm clicking sell. The order's there. It went down. You need to be able to, right click, buy, bam, this. Oh, there's so many things here. I need to learn and read them. I need to not be an idiot. That's why this is called Trading for Dummies. You can figure this out. A lot of this stuff you can figure out on your own. This is how I figured it out. Every single thing that's on here, it has a word and a meaning. So you can click on it, go over to the side, trend line. Okay, if I don't know what a trend line is, you can Google trend line and YouTube trend line, and you'll find information on the trend lines. You can find that with every single thing that's on this. And there's so much information that that's another thing with strategy. You need to pick some stuff and get stuck in that and not be all over the place, because there's so much information. You can get lost in learning and not really learn anything because you're just absorbing a bunch of crap that doesn't even work together. It needs to work together seamlessly. It needs to be flow together. It needs to be integrated together. So if you start using, I don't even know. I'm not even going to go into it. But if you start using all sorts of random crap, inside pitchfork, modified, shift pitchfork, like, who cares? It's crap. Don't bother. Look, I have 3 things right here and a note to myself. That's all I need to worry about. Don't make it complicated. Keep it simple. But this, you're gonna click buy and sell, right? You're gonna need, like, you change your colors, whatever colors you want. Maybe you want it to be pink. Okay, cool, it's pink. Great. And then you gotta save, settings. Save it. Change this stuff. Change your status line. Enter trade. Okay, cool. You entered your trade and you don't want to see money. You want to see ticks, right? So when I'm entering it, when the brackets are there, I want to see the money so I know how much I'm risking. Actually, I'm going to change that back. I don't want to see that anymore. I just want to see ticks. Ticks are all that matters for me, because I'll get into that later, but basically with these prop firms, you can I guess I'm getting into it now. The prop firm, as I've mentioned it 4 times, use prop firms when you're starting. You're gonna, your first week, 2 weeks, however long, so you can actually know what the hell you're doing and clicking the right buttons. You want to use this paper trading that's built in. This is Trading View. If you don't know that by now, sorry. And I guess use context clues, because it's probably somewhere on the screen. But that's also my fault. You want to use the demo trading, and then find a prop firm. It doesn't matter what prop firm you use. Find one that's cheap, because you're going to expect to lose when you start, and buy an account. Buy a small account. I use the $50,000 accounts from either Top Step, Apex, or Tradeify, or My Funded Futures. Those are the 4 firms that I use and recommend. Or I think some people use Take Profit. I don't know. Whatever. There's a bunch of firms. Pick one, use it, stick with it, and don't bounce around. Just, you can learn how to do this for a very low cost, right? Like, if you're buying 1 account a week and you're getting it on a good sale, like, it can cost you $150 a month to learn how to do this. Like, the Apex ones, they do 90% sales sometimes, and then they rebill at 80%. So your first month is going to cost you, if you buy 4 accounts as soon as the sale drops, expecting to blow 1 a week, which I don't even recommend doing that, but say you use 2 a month. I think that's more reasonable, because then you have a $250 loss limit. You can lose 10 days in a row, blow the account, and then have your secondary account. But basically, if you do that and you're paying the 80% price, you're only spending like $70 a month to learn how to do this. If you learn for a year and you don't get a payout for a whole year, what's that? 70 times 12, 700, 840. You're spending $840 to learn a skill that is going to pay you eventually, whether it takes you a year, 2 years, 3 years, 5 years. It's going to eventually pay you what you spent in that period of time in a week. You're going to make it back in a week eventually. I promise you. So, like I said, focus on the skill. Keep your cost down. Don't be risking your own money on, I want to make money now. I won in my demo account, so I'm going to put some money in a real account because I think I know what I'm doing. No, don't do that. Just risk somebody else's money. Risk their money. Use a small amount of your money and make your journey cheap until your journey is paying for itself. Because your trading should eventually pay for itself, and then you can scale up. Like I said, these companies allow you to have multiple accounts, and you can use a trade copier. So if you have a trade copier and you have 2 micros on one account and you can make 400 bucks, and then you get a second account because your first account paid you, and now you're making 800 bucks doing the same exact thing, literally changing nothing, just letting software do work for you. Now you get paid on the second account and you get a third account, and now you're making 1200 bucks doing the same exact thing. Like, it can compound pretty quickly doing nothing different except just having the skill and being good at the skill. So keep it simple, get the skill, use prop firm accounts. That's like what and how you're trading. I think that's part of it. And obviously you need capital to do this, and so using your own capital in some way is inevitable. And the prop firm account, the $50,000 account, it's it's $2,000 or $2,500 in drawdown for depending on the company. So let's say you get one that's $2,000 and it costs you 50 bucks. 2,000 divided by 50, you have 40 chances. I don't know, I could have done that mental math, sorry. You have 40 chances to blow your account. 40 times 2,000 is $80,000. So on paper, you can lose $80,000 before you spend what you would have lost in one of the accounts. So it's literally a no-brainer to do that, right? Like, just use a prop firm account. And let me think what else. I don't know the time. How long has this been? A decent amount of time, I think. I don't think I'm forgetting anything. You're gonna need NinjaTrader, a journal software. I use TradeZella. It looks like this. You can upload, add trade, upload files, and then go through. Here I was, this day I learned a lot. I was up 268, I ended minus 300. You can see, green, 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 little tiny red, minus 75, right back green, green, and then turned it into a red in 20 minutes. So I traded from 9:30 to 11:45 green, 2.5 hours almost, and then chunked it in the last 20 minutes. So I hit my expiration date, right? I have a timer set in my phone where my time is up. I'm supposed to be done. I hit my expiration date, and I kept trading, and it ended the week with the red day. Still green on the week, no big deal, but not the best. It's a little frustrating, and you can see my win rate is terrible right now. My losing day, terrible. This, terrible. I think I had, I don't know, it was just from this. This is terrible. Oh, no. My winning days were bad too, because I was started very red, and then almost got out, very red again, and then, bam. This, same thing. Red, climbed out. And then you can see here, this was in the afternoon. So I was red down here, and then came back. Anyways, that's whatever. But you need to be able to track it. So TradeZella, you need that. I also live stream my days so I can review it later and I can see myself and my emotional control and if I'm being a spaz or not, which I most often am, and I'm really working on that. That's my biggest issue. Is a lot of the time I'll just be in the right trades, and then I'm so impatient that I'm talk myself out of the trade or get so angry that I miss something, don't close it where I think to close it, and then I'm just so mad at myself that I end up losing like 3 in a row after that, and then it's like it just spirals. So it's pretty silly stuff because most of the time I'm in the right spot. It's high. Not 90%, but I'm very, like, my win rate and how often I'm actually thinking the right thing don't even match up remotely close at all. All right, let me go through my little sheet here. NinjaTrader is going to be a part of it, I think. Maybe. You don't really need that at the start. You just need one account at the start, so one account at a time. You don't need a copy trader at the start. You don't need to worry about any of that. That's all more advanced stuff that you worry about later. Um, just get on TradingView, get a demo account, eventually get a prop firm account, find a strategy, and just enjoy it. It's fun. It's supposed to be fun, and it's eventually an escape from your current reality. That sounds weird and intense, but most people, myself included, when I started this, I did not like my current reality, and I needed an escape from it. And this journey can be that escape, whether it's just being hyper focused on something and being able to work on improving something for a while. That in itself can be an escape, or like you can literally change your life and your family's life and your future family's life and everybody you know's life if you get good at this skill. And I think if you remember that why and that reason as a part of this journey, then you're going to go really, really far, and there is no limit to the ceiling of what you can do with this. I focus on one thing, but I can do this one thing on both of these, and I can do this one thing on any stock or crypto chart that I pull up. So it's like nobody can take that away. I can lose all the money, I can lose everything tomorrow, and as long as my brain and my eyes work, I can still win and change my life. So stay focused, and if you have questions, hit my phone number or leave a message, and good luck and have fun.